Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Shares of First Citizen Bank shares absolutely skyrocketed on March 27th when it was announced that it had reached a deal with the FDIC to acquire most of the assets that were Silicon Valley Bank. There's a really good chance that before this Monday announcement, just like with Silicon Valley Bank, you probably had no idea who this bank is. And now you're probably wondering, hey, is this a bank worth buying right now? I'm Jason Hall. This is The Smattering. I've got my co-host here, Jeff Santoro. We're going to talk a little bit about what's going on. Hey, Jeff.
Hey, so yeah, when we were talking about this last week and we heard all the rumors about what banks could possibly buy all or some of Silicon Valley's assets, this was not on the list. I had never heard of this bank. This is not one of the big banks that people were throwing around the name of. So I guess to start off, what is First Citizens Bank shares? What does this bank do?
So First Citizens is one of the larger banks based in North Carolina, 500 locations or so, 500, 600 locations. And they've been one of the faster growing banks. An interesting thing about where they're based in North Carolina is they do have some exposure to technology, the tech industry, more biotech than anything, because you have the research triangle that's in that area. So there's a lot of innovation that happens there. And this is one of the larger banks in that area. And this was an interesting thing that I didn't realize. They said in the press release that since 2009, they've done more FDIC kind of coordinated deals than any other bank in the country. And right, you would think maybe it's Bank of America or one of the other big banks that's done more of that kind of roll-up activity. But no, apparently this is the one that's kind of soaked up a lot of those FDIC failures over the past 12 or 13 years.
So my understanding is they didn't buy everything that was Silicon Valley Bank as we knew it prior to the government taking over. So what did they buy?
Jeff, I'm going to do a screen share here from their presentation where they kind of broke down exactly what they were acquiring. So you see on the left, this is First Citizens loan book. In the middle is Silicon Valley's loan book. And then on the right, you have kind of the combined business. So essentially, they bought $72 billion worth of loans. That doubles First Citizens loan book right out of the bat. So there's that. Then if you look at deposits, they acquired, now this again, deposits are a liability. So they brought in $56 billion of deposits. And this is a really important part of it. You see a big chunk of that is non-interest. So that's one of the things that has been talked about a pretty good amount here with the whole SVB saga, is that where so many of its deposits were earning no yield. And First Citizens is looking for a way to try to accelerate that business banking part of its business and acquired that. So you put it all together and it would add about 70% to its deposit base. The key here is that they acquired it, that $110 billion worth of assets, which is the loans and the cash, $16.5 billion discount. They also worked a deal with the FDIC to share in the risk, which I think is really interesting here, because at a certain level, if loan losses from the loan portfolio that they acquired are above a certain level, the FDIC will actually share in those losses. But the flip side is that the FDIC can actually share in some of the upside as well. So it's kind of a good give and take. And Jeff, I think the biggest thing I want to point out here is what they didn't acquire, and that was the loan securities, those mortgage-backed securities that were kind of at the center of this whole story with Silicon Valley Bank. It's what they did with most of the deposit cash that they got during 2020 and 21. These are the loans that are yielding less than 3%, that clearly no bank that made a bid to buy it was either willing to buy or willing to pay the price that the FDIC wanted. So they get these core assets, the loans that they want to own, they get access to the depositors, and they get the cash, and they get some guarantees from the FDIC to limit potential losses if the loan portfolio doesn't perform.
So what are they getting out of this?
To clarify the difference between there's what they got, and then there's what they're getting out of it, and what are they going to do with it. So on the surface, obviously, you get those loans, you earn interest on the loans, you get a pretty large book of non-interest bearing deposits. So when those customers come for the money, they're going to get their cash out. but you have the cash. There's that $35 billion of cash that they got. And the bulk of it is on non-interest bearing deposits. And I think really what it boils down to, Jeff, is that it's part of their growth strategy, looking to continue to expand into more business relationships. And this really accelerates that. My question, Jeff, and we need to talk a little bit about the risks here, is whether they get out of it what they want to, and whether or not this can accelerate their growth. Because if you look at that $57 billion in deposits at the end of its fiscal year, Silicon Valley Bank had over $170 billion of deposits. So here we are, the middle of March, less than 3 months after the end of the quarter, and 120 billion of deposits had left Silicon Valley Bank. So they were obviously leaving in fear that the bank would become insolvent. The question is going to become, how many of those deposits are going to stay at First Citizens and are going to continue to develop further banking relationships going forward?
So are there other risks that investors should be aware of if they're looking at this as a potential buy?
Yeah, I think the biggest thing is that they fail to execute, because this is a giant acquisition. The terms look really, really good. So it does seem in a lot of ways to be reasonably low risk in terms of loan losses. But the reality is that we don't know how well is First Citizens going to be able to take the people. And I think this is a big part of it. Like, you think about Silicon Valley's private banking business. This is something that they mostly just acquired over the past couple of years and have been building. How good of a job are they going to be able to do to retain key personnel with those parts of the business that are going to allow them to retain those banking relationships and those client relationships? And we just don't know that yet. So there's a massive amount of execution risk that investors need to think about. And that's probably the biggest thing that I would caution investors before making any. I think that's probably the biggest risk that investors should consider before they take any action here.
So speaking of taking action, I noticed that the stock was up huge today on this news. So considering that and all the things you just talked about, do you think it's a buy right now?
I think it's too early to tell. I really do. Again, there's some things that are favorable about this. This is a bank that's laid it out there. They've done plenty of more of these FDIC deals over the past 13 or 14 years than anybody else. They already had a growth strategy in place. They have a relatively diversified book of business, so this fits in and just adds more diversification. But from my view, I think this is the kind of situation where you need to look and learn and give management time to prove that they can integrate this well. This could be a transformational acquisition for them to make. But frankly, I think it's going to take at least a couple of quarters and maybe longer to find out how the integration goes, if they're able to retain that deposit base and then actually maybe start growing it, or maybe even reattracting some of those clients that left. And if they can start, the next couple of quarters showing that those clients are coming back, that would be tremendous, right? And that would be huge evidence that it's working well. But frankly, I think this is a time to sit back and watch and not necessarily act.